Hello everybody, this is Lara with your end of the week video for US trading week, Friday 31 of the month of July. The main Elliott Wave count expects more upward movement and prices moving higher. The target remains the same at 112.79. An alternate Elliott Wave count does allow for more downward movement to end at support at the lower edge of a channel, but it's an alternate with a lower probability, and for a long time my analysis has expected that this low back here in April 2020 is sustainable, and now we've got a new high above this point and a breach of this long held channel. That view has more technical support. This channel isn't being important for pullbacks at the moment. Draw it from the start of this big downward movement. This is oil's all-time high back in 2008 to this high here, and place a parallel copy on this low. A huge overshoot at the end of this movement, typical behavior for a commodity, and now this channel is breached with a full monthly candlestick above and not touching the upper edge. This is a strong breach. This current month of July that's just finished has found support, a typical pullback to test support after a breach of the channel. I will expect for any surprise pullbacks to find support at the upper edge of this channel. This is drawn on a semi-log scale. This Elliott Wave count expects that this downward movement is a counter trend movement, so the bigger picture at the quarterly chart level would be expecting that oil is still in, or is resuming in, a bull market, which will be labelled a big third wave at supercycle degree. So it will be expected to last about a generation, and it may only subdivide as an impulse at cycle degree. So it'll be labelled cycle 1, 2, 3, 4, 5, and it has to meet all of those core Elliott Wave rules for an impulse. Wave 1 must subdivide as a 5, 2 must be an Elliott Wave corrective structure, a counter trend movement, and it may not move beyond the start of 1. 3 may only subdivide as an impulse and must move beyond the end of 3, and then 4 has to unfold, must be an Elliott Wave corrective structure and may not overlap wave 1 price territory. And finally 5 should move beyond the end of 3, not a rule, a guideline, to avoid a truncation. This is what it looks like in the opposite direction. 1, 2, 3, 4, 5. This structure meets all of those rules. Let's take a look now at cycle wave 1, where we have so far primary 1, 2 and 3 has moved beyond the end of 1 and may only subdivide as an impulse. When it arrives, 4 must unfold and may not move into wave 1 price territory, but will probably find support at the upper edge of this channel if it gets down that far. Let's take a look at the weekly chart, where this high and this low are this high and this low. Here's the start of primary wave 3 within cycle wave 1. Primary wave 3 also may only subdivide as an impulse with all of those rules that I've just outlined. Elliott Wave is fractal, and each degree of labelling is a lower fractal. So we have intermediate, a lower fractal of primary, a higher fractal, and cycle, a higher fractal of primary. Within primary wave 3, which may only subdivide as an impulse, intermediate 1 and 2 may be complete. Intermediate 3 also may only subdivide as an impulse, and when it arrives, intermediate 4 may not move into wave 1 price territory. Within intermediate 3, we've got minor 1 and 2, and now minor 3 must move beyond the end of 1. And when it arrives, minor 4 may not move into wave 1 price territory. The target for intermediate wave 3 is for it to reach 1.618, the length of intermediate wave 1, at 112.79. That's a common Fibonacci ratio between a third wave and a first wave. If price gets up to that target and the structure looks complete and there's some evidence of weakness at the end of the third wave, then we'll expect the fourth wave to begin. But if price just keeps on going up through that target, I would then use the next Fibonacci ratio in the sequence, 2.618, to calculate a higher target. The target for primary wave 3 is for it to reach 2.618, the length of primary 1, at 121.43, because it fits with the target for intermediate 3. Within intermediate 3, minor wave 2 may not move beyond the start of wave 1 below 57.26. Draw this acceleration channel around intermediate 3, draw the first trend line from the end of intermediate 1 to the end of minor 1, the last high. Place a parallel copy on the end of intermediate 2. Minor 2 has found support at the lower edge of the channel. There's a huge long lower wick. This is a very bullish candlestick. Unsurprising that we got upward movement this week. I'll expect it to continue. Let's take a look at the daily chart where this high for minor 1 is this point here. So here's the whole of intermediate 3 so far, an impulse for minor 1. A quick sharp zigzag for minor 2 with a small overshoot at the lower edge of that channel, and minor wave 3 moving upward now. The target for intermediate 3 and primary 3 are the same. Within minor 3, no second wave correction may move beyond its start below 65.09. At the weekly chart level, instead of just intermediate wave 1, 2 and minor 1, 2, and it's possible that primary wave 3 could be over in its entirety, although here it's shorter in length than primary wave 1. This is possible, but it has a lower probability than expecting an extended third wave. And this wave count doesn't quite have the right look. Within primary wave 3, as this is labelled, it's intermediate wave 1, it's the first wave which is the strongest and overshoots the upper edge of the channel. This looks like a third wave, not a first wave, but I wouldn't really want to put the first and second waves down here. This looks like the best point to label them for this alternate. So this has a lower probability. But what if we do see a pullback? This wave count's technically possible. If we do see a continuing pullback, I'd want to label it primary 4, and it may not move into primary 1 price territory below 43.77. At the daily chart level, we're looking now at the possibility that primary 4 is a double zigzag, the first zigzag in the double, intermediate W. The double is joined by a 3 in the opposite direction labelled X. The second zigzag in the double would be expected to deepen the correction, so intermediate Y would be expected to move below the end of W so that it achieves its purpose. It may find support at the lower edge of the Elliott channel, which is copied over from the weekly chart. How much support for either of those wave counts is there from classic analysis this week? Let's take a step back and look at the monthly chart, because now July has finished the last trading session for the month. The candlestick on the monthly chart has closed as a doji, which is slightly concerning for the bullish case. Doji can appear in downward trends and they're not particularly concerning, but when they appear in an upward trend, it gives cause for concern. On its own, it is not a bearish candlestick reversal pattern. But if we see a downward month next month, it would be part of an evening doji start that hasn't formed yet. It's just a warning to exercise caution. It's not as bullish as we would prefer. However, volume is supporting upward movement at the monthly chart level, and on balance volume is making new highs prior to price making new highs, so that's bullish. The last signal it gave was a bullish bounce up of support. ADX indicates there's an upward trend at the monthly chart level. It's still in a relatively early stage. There's a long way to go before ADX would become extreme like it did back here for the downward trend. RSI is in neutral territory. There's still room for price to continue higher before it reaches overbought. And stochastics is overbought, but when in a trending market we use RSI, not stochastics. At the weekly chart level, we have this very strong hammer candlestick pattern which supports the main Elliott wave count, and price bounced up off support quite strongly at 65.65. ADX is declining. It's not indicating a trend at the weekly chart level. If it turns up again though, the trend would already be extreme because it's above both DX lines, but there would still be room for an upward trend to continue, because for this market trends can reach very extreme. That would be where ADX would reach 45 or above and above both DX lines, so there's still quite a bit of room for an upward trend to continue. It's just getting toward the middle of the end. ATR increases as price falls seems to be normal behaviour for this market. On balance volume, no signals at the weekly chart level. There's weak bearish divergence between peaks here between price and RSI that may be resolved now by a couple of weeks of downward movement. And stochastics back in neutral territory at the weekly chart level. At the daily chart level, a little bit of concern with declining volume while price is rising, but we have seen this before early in a new trend for oil. We saw it back here a few days in a row, of rising price and declining volume. That is happening again, so it's happened before and yet price continued for a further about $15 from low to high. It could certainly happen again and price could continue to make new highs. On balance, volume gives us a weak bullish signal at the daily chart level, supporting the main Elliott Wave count. RSI neutral territory. ADX is declining, but the positive DX lines just crossed above the negative. This pullback at the daily chart level has brought ADX down from just reaching extreme back up here. It's come back down below both DX lines, the positive DX lines now above the negative. If ADX turns up again, it would then indicate an upward trend, and that would be a very strong bullish signal because it would be rising up from relatively low levels and below both DX lines. ATR again declining as price moves higher seems to be a normal feature for this market, like the S&P. ATR increases when price falls and declines as price rises. Stochastics still in neutral territory, but if ADX does begin to indicate a trend, then stochastics could remain overbought for a long period of time while price travels a considerable distance. So I'll watch these two together. And MACD gives us a bullish crossover supporting the main Elliott Wave count. So support for the alternate would be a lack of support from volume, but that's happened previously back here. Support for the main count, this hammer, and at the weekly chart level, this very strong hammer candlestick pattern. That's all from me with your oil analysis this week. I hope all our members are having an awesome weekend.